Greetings, everybody. It's Jeff Scott. This is my weekend review. I'm on the road, so this is probably, well, said it before, but it doesn't always happen. But hopefully it's going to be a short one because I've got some things I got to get going to. I wanted to get this out because I'm not going to be available to do it later. I titled today, 2 Steps Forward, 1 Step Back. Every time it felt like we were breaking out this week, we came backwards. Turned out to be a pretty damn good week, though. It's early in the morning on Sunday, and futures are not out yet. As always, this is for education purposes only. I'm spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for all my tools, and trading involves risk, and you alone are responsible for any decisions you make. When I do live education, I try and teach people to become their own guru, something that I learned from Ian Woodward, who really was my guru. How to make money in stocks is how I started, so cancel them, improved by Morales and Catcher. I'm taken to the computer with HGSI and improved upon by Woodward and Brown. George Lee, who I had the opportunity of spending last weekend with in Orange County, giving an educational program. Van Tharp, the king of money management. And then the person who really took me from being a good guy at analyzing what stocks look good, but to when to buy them and how to make money with them is John Person. Here are a couple of his books. He's got some great indicators, does some great education, highly recommended. I own a lot of programs. I hide my desktop so I don't have to explain them to anybody or have my wife realize how much I spend on them. But I need TradeStation and Thinkorswim to do my trading. I like Genesis when I play with futures, but I don't need it for my stocks. And then HGSI is the best program I know for post-market and delayed market analysis during the day. EdgeRater is a great supplement. I do seasonality and a number of websites I like. Here is highgrowthstock.com. I have no financial relationship with them. I just point out a free 30-day trial under investing strategies. You can find hundreds of videos by me and others. Stock patterns are cyclical. I feel like I say the same thing every week, which is I feel like we're getting into this red circle. The bottom's going to drop out. And then you have days this week where you get potentially six-figure returns on a big account. And we had a couple of those days to the upside. Friday was one to the downside. Are we about to roll over, or are we at the beginning of another leg up? I can tell you that the second half of April, after tax day, is typically seasonally strong. So maybe we're about to do another leg up. Let the markets tell you, not some guy on a video. Therefore, since you have to make a decision of what the market's doing, that will probably affect how you trade. I have raised cash, have smaller positions, have been selling premium. I'll let the markets direct me. I wonder if we don't have another leg up before we get the sell in May wave, but I'll let the markets direct what I do. And right now I've been somewhat cautious. As I look at the sector review, I know you can't really read the sectors, but let me just tell you that home builders had some mixed. The big strength is energy. In fact, energy, staples, and utilities were the strength. A lot of weakness in the market, especially financials, despite stellar good earnings from J.P. Morgan, Wells Fargo, and Citi. Major markets tell a story. I'd rather jump into the program and show you this instead of just talking about it. Let's maximize these. And those who've not been here before, I spend most of my time looking at the market and industry groups because that's going to determine whether or not you make money next week, not which stock you pick. You can be the world's best stock picker. If the market goes down, the stock's probably not going to have a great week. Whenever I have a black chart, the green is a 17, the yellow is a 50, the red is 200, volume and OBV, pure candlesticks. The arrows are John Person, PPS buy signals and sell signals, which are free on Thinkorswim. These are the E-minis. Why do I look at futures here instead of stock indexes? Because sometimes the tails occur during the pre-markets or after hours. I'll look at indexes and HGSI. So as I look at this, and this is sort of what you're seeing. You're seeing prices sort of stuck between a rising 200-day moving average showing the longer-term strength and a falling 50 in yellow and 17-day simple moving averages. And until we declare which way we're going to go, We have been range bound now for a couple of weeks. Again, my sense is we break higher, but that's just a sense or belief. I'll let the markets determine what we do. And frankly, you could argue right now that all we are, I don't think there's a box on this. Let's see. Drawing tools. Yeah, let's see this will work. You could argue that right now, all we are doing is we're in a box. And that didn't work what I wanted it to do, and in a trading range. And we'll have to see. But anyway, it's hard to be very bullish or frankly very bearish looking at this pattern. It's got to declare itself, and when it declares itself, I'll make my moves accordingly. Trapped in moving averages. If I look at the NASDAQ, closer to the 50, above the 17, but really the same basic pattern. I look at the Dow futures right up against the 50. Interesting place with a kind of a spinning top, but can this break above the 50? If we start to break above the 50, I'm going to be a lot more bullish for the next couple of weeks. And here's probably the strongest of the indices, although had a bearish engulfing pattern like candle on Friday. This is the IWM representing the Russell 2000, which is above the 17 in green in the 50-day. You know, you have that 1750 cross. So there's a lot of things here to be concerned about. But, you know, we're really in a range-bound market right now going sideways. The VIX, with a difficult sell-off on Friday, the VIX actually dropped. That's interesting. Maybe this is a good sign for the bulls. And then the dollar, which is sort of like sideways here, also in its own little box, going back to the end of January when the market peaked. So I look at this and I see a market that is it's range bound. At the higher end of the range, perhaps, as it coming up to the moving averages, got PPS buy signals. Maybe we break through this week. We shall see. If I quickly look at weekly charts, and I'm just going to stand back and just show you've got small, well, actually, let's take a quick look because I think this is interesting as well. We have little green candles occurring at the 50 weekly. So the 50 weekly, like the 200-day, continues to hold. This is the E-mini. You know, this might be a place that you might expect the market to rebound. Similar on the NQ, did not get quite as far. On the Dow futures, similar. Russell futures we know are, or the, at least IWM is above the 50, right below the 17 it closed. And then more importantly on the weekly VIX, you could see a big down bar this week. And on the dollar, as we said, sort of could be a bear flag on its trip lower. So you want to be optimistic? I think you can be a little bit, I still got to wait and see what the markets do personally. Rates trickled a little bit higher this week, which was surprising considering what happened on Friday with the banks selling off and home builders and REITs doing okay. AD lines, the white being the indicator, yellow being the S&P 500, both ticked higher. You can look at it a little bit better here. You can see the AD line on the NYSE going higher, while you have the IWM, the Qs, the spiders, and the diamonds also going higher. And with the market firming a little bit on the week, bonds gave up a little bit. Breadth improved on both stocks above the 200, above the 40. And one of my favorites, the 3-month new high, new low, which a while back, maybe 2 weeks ago, gave us a buy signal. Last week had pulled back as well, is now in the middle range, not giving us any signal. Most of these indicators to me only matter in extremes. The daily McClellan and the weekly McClellan are not giving me a signal. Nothing is at extremes, no 0-point rejects, no big divergences. Talk about a market that's giving you a very neutral picture. We're nearly 50-50 in the S&P 1500 on stocks above and below the midline of the Bollinger Bands. And if we look at our buckets, we find that very few stocks are below or above. So that's a neutral picture. There's not been a Hindi since the beginning of February which is not a big surprise because the markets both have to be near new highs on the NYSE highs and lows, and we really aren't at anywhere at extremes, so that remains negative. Market tone without a series of kahunas, which is interesting, which is major moves on a single day, has turned pretty much green across the board, which is bullish, and sector strength has also improved. So slowly but surely, these markets are showing some strength underneath the hood with improvements in AD lines, improvement in some of the breadth indicators, and improvement in the Woody indicator. If I look at three of the artificial indexes that I've worked with, the canaries, again, we all know that Priceline is now bookings. Bookings is reflected in the chart in the new index. And the canaries, which have been leaders, are struggling to get above the 50. That's interesting. It took 3 days. It failed. If I can get the canaries above the 50, I'm going to feel better about this market. If not, then that's not good. You look at the Scott Index, which were leaders put together about a year ago, and they've actually maintained a nice run. They too are struggling to get above the 50. And then I put up leaders right before the market topped, and they are sitting below the 50 as well. None of those look particularly good, and they would suggest to me that this market is not that strong and it's stalling at resistance. No news and earnings. This week is the week of Fed heads. We've got Fed heads on Monday, Tuesday, Beige Book on Wednesday with William Dudley speaking twice. On Thursday, we've got some Fed heads speaking. We got a bunch of bond auctions on Friday, more Fed heads in the Baker Hughes rig. If you look at employment numbers, you look at CPI, PPI, it's not a busy week, but there's a lot of Fed's heads speaking. What is busy is we are in full-fledged earnings season. Look at some of these big whoppers: Bank of America, Netflix, Goldman Sachs, United Health, Morgan Stanley, Abbott Corporation, BlackRock, Novartis, Unilever, Philip Morris, Procter & Gamble, Schlumberger, GE, Honeywell. This is a huge week. This is not an inclusive list. This is a list of some of the ones that I thought are most important. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Commodities led the markets higher this week. Gold, silver, and oil all strong as dollar flattens. Volatility fell on Friday despite weak markets, which may have been news driven by imminent Syria bombing. Energy stocks lead equities as other leading groups attempt to turn higher, including biotech, semis, and casinos. Even home builders and REITs, despite higher rates. With the COMEY Book and Trump response to Syria behind us, can normal seasonality take over and lead the market higher into May? I will tell you what's a bullish market, and I apologize for the off-color remark, but apparently Stormy Daniels played in my hometown in West Palm Beach this weekend, and she sold out with tickets up to $1,000. So coming up against the president does stimulate ticket sales. And we should get a sense of earnings season as the equity response this week as the majors report. With the tax cuts, with the things we heard a quarter ago, people are expecting some blowout earnings. I hope the market doesn't disappoint. Let's go with my top-down review. Close this piece off. Now, just to give a sense of last week's strength, I think I have this here. Let's see. Group performance. I look at the market 7 days. I take all the different groups that I look at. The first thing I run through, and I notice there's just a few that are red, and the rest are black. Those that have my name or another name that have a date in front of it, these are some of the pre-planned scans that are done in HGSI. I look at a couple of things to figure out how my week was. What was the S&P 500? It was up 2%. That's a pretty, or 1.99, excuse me. It's a very big week. I look at my stocks going into the week. They were up 2.49%. I look at my buy watch. It was up 2.35. I like to do better than the S&P, so I did okay. Growth was in Fuego. IBD 50 was up 2.94. And then some of the groups that were best turnarounds, small stocks. Interestingly, stocks that had moved to the downside a lot the prior week actually are the ones that did the best. Hence, some of the stocks that were the strongest in the market, best of Woodward & Brown, high ERG, stocks that viable gap ups, they actually suffered. So it was sort of a reversion. Those that did bad the prior week outperformed. That's kind of weird and interesting at the same time. Then I go into Woodward & Brown user groups, Major Markets Plus, top-down view, just to see where the major indexes fall here. and it gives me a chance to look at the index rather than the futures. You can see gold, oil, gold, gasoline, transports, commodities, silver, and then the dollar lead, volatility and semis on the bottom. If we look at 5-day performance here, you can see how oil was up 8.3, commodities themselves were up 5.4, and the big losers were utilities and volatility down nearly 20%. It's a big down week there. Let's take a look at some of these indexes. Here's the S&P 500. Same story, trapped between the 50 and the 200. Now, what's interesting to me here is you'll notice on this bar where my arrowhead is, you don't have the tail all the way down to the 200. That's what happens, the difference between looking at the futures and looking at the stock index. That's why I like the futures. That's the S&P 500, the IWM, the strongest above the 50, but did have a bearish engulfing pattern. The NASDAQ somewhere in here. Let's see if I can't even find it. Similar to everything else, stacked between the 50 and the 200. And lastly, similar with the Dow Jones Industrial Average. If I look very quickly again at the dollar, you could see the dollar just going flatline, while gold had a surprisingly strong week. Perhaps it was up because of concern about Syria. If that's the case, maybe this bump is done. Silver also responding favorably, although below the 200. And then the VIX, what got clobbered this week, you can see. Now, it's still well above where it was for most of the last year, but it's getting closer. And that's been one of my concerns, is why the VIX was basing at a much higher level. Was it telling me something underneath? Next thing I like to do is look at the industry groups, which in Woodward & Brown is 7. If I hit the warehouse view, it'll change my warehouse. And you can see we study 173 groups. I have found over the years the best way for me to rank them, what works for me, is to use momentum. Which groups have the most momentum? And for that, I use a 2-day force up, showed me 39 groups to the upside. A 2-day force down shows me 43 to the downside. Looking to the downside, I see banks, both diversified banks and some of the smaller banks. I thought I just saw that somewhere, were weak. Here it is. Internet-based services, internet media, app software, e-commerce, specialty pharma, specialty apparel, footwear. These are all high growth stocks. So it was not all great in high growth stock land this past week, despite the performance. If I look on the upside, we have energy, metals, biotech, semis, and you see what else comes beyond that. Last week it was all about energy stocks, and they did not disappoint. If I right-click on any of these, this is the strength of HGSI. I right-click, change index group. I can now see a list of the stocks. Again, on momentum. The one I bought last week was ConocoPhillips, which wasn't a bad thing to buy. It was up 9.5%. If you go back 5 days, 1, 2, 3, 4, 5, you had a pattern of these. This was sitting right in the 8-day exponential. I saw a cup, a handle, and it broke out, and I took a position with some options. Look at the earnings per share growth compared to the multiple. I like it when it's that much higher on growth than the multiple is, though I have to admit that's a very high multiple for an energy stock, pays a small dividend, and I bought, and I'm still long, ConocoPhillips. Concho Resources, is this, sure we're not in alphabetical order, a little bit lower in the pattern, but did break above the 50. Occidental Petroleum, I think this is more of a pure play oil. Great earnings per share growth, also a high PE, better dividend than my ConocoPhillips. Broke above, this was where it was sitting last week. This was also a nice place, broke up, continuing to break out. I can't tell how many are good here because they're all good. Pioneer Natural Resources. I like Marathon here, breaking out. Hess, Whiting Petroleum. You know, it's hard to pick one. You need to be in some energy. Apache's below the 200, but it's got great earnings per share growth. EOG Resources. So I wanted a combination of a chart pattern and a dividend. I like ConocoPhillips, but there's plenty to like. So energy still looks strong, and energy prices are high, and the more craziness in the Middle East, the higher they're going to go, although they're certainly at the high of their range. Oil and gas services also moved up this week. Rig, I remember when this used to be a $100 stock, having a nice move. In fact, perhaps getting ready to break out to recent highs. I have some Halliburton. I think it's time to add to that position. The bongo went green. Nice pullback here, squeeze, multiple movable breakouts. Kahuna's pocket pivots broke out above the 50 on Tuesday. That one looks like it wants to go higher. Look at the earnings per share growth on this stodgy old player. Schlumberger, the big brother, big sister, I'm not sure which one's bigger. One's $8 billion a quarter, one's $6 billion. So Schlumberger is the big brother. It too breaking above the 50. Bongo here, good earnings per share growth. Ensco, a lot of these look nice. I know some people bought National Oil Varco last week on the breakout there. That's pretty strong. All right, so there's a lot to like in these. Now, I'm going to go back for a second. I get a lot of questions why I had them put what's called the scaled force. So if we look at the 2-day force, and I want to just bring over to volume. Remember, force is today's price minus yesterday's price times volume. Automatically, the stocks with the super high volume are going to come to the top. But volume is much more important in this calculation than price move, but I want the stocks that are moving in price. So what if we had a way to look at volume differently? And maybe I'll look at volume as how much today's volume over its average volume, which gives me, if I'm up 3 or 4 times, that gives me a multiplier of 4, not just how big my volume is. And bring price is more important. So watch the names here. Watch the volume change. Now I'm going to bring up my scaled. So now what's going to happen is some will be the same, but all of a sudden, I hope I can get you volume. Oh, it's up here somewhere. Did I go right by it? I have reduced the importance of volume on this calculation. As you can see, the volumes here are much smaller. So the stocks that come to the top are being driven by price change. So very quickly, let's just look at these. This is one Pioneer that was on both lists, breaking out. That looks nice. Concho, expensive stock. But here's Viper. This was one of my favorite ones last week, and another stock that I took a position in that I think still looks great. Breaking out here, bullish engulfing pattern on Friday, great earnings per share growth, pays a 6.5% dividend yield. That's why I like it. Being an old fart and wanting to retire someday. Energen, look at the earnings per share growth. PDC Energy, Hess. So the reason why I have the scaled is so that I reduce the importance of volume and drive the price change as being more important. So I go back and forth on a lot of these groups. Precious metals, change to mining group. Now, what I own here is some nugget. And the issue is, are they done going up, or do I need to start buying some more individual? I also bought one called Kirkland's. We'll look at that as well. Newmont breaking out here. Is this driven by Syria, or is this something new, real, something to watch? Barrick, further down the pattern, much less exciting. AEM, a break above the 200 would be interesting. If I remember, they have silver, nickel, and gold, so more than just a pure play gold. IM Gold stuck there. Except for Newmont, they don't look that great. But if I go to my scale setting, and you can see the first thing is that's kind of bothersome, is that the only one above the index is AEM. Everything else is weaker than the index. Now, the one that I also bought last week was, and I talked about it on my video, was Kirkland, stalling or giving a little bit of a flag up here, 1, 2, 3. But I bought it as it was breaking above the 50 here, had a PSAR reversal and a nice Wednesday, and then a little flag. Decent earnings per share, at least for the next quarter. I will go through typically the top 10 industry groups, taking a look at what's driving this market. Let's look at biotech. These are smaller stocks for the most part. Let's look at scaled and see if anything comes to the top. And I have found that using the scaled feature allows me to find stocks that I otherwise would not have known. Bible gap up, looking, although it's at a downtrend, so it didn't get credit with a kahuna on Thursday. Don't know anything about Bellicum. Still below the 50, I'd probably pass. Sage, pass. See if anything here I like. You notice I'm going fast. All right, here's one that I've been in and out of, COMEY. I like the fact that it's sitting right on the 50. It broke up on Wednesday. It's gone sideways a couple of days, coming out of a squeeze. Don't like the earnings per share growth, but I like the pattern. Agios, one of the potential acquisitions by Celgene. Don't know Adentis. And here's one. This is probably one of my favorite charts. In biotech, it was more favored a week ago. But here's a stock that breaks out of a squeeze, mobile breakout, kahunas. Now the bongo's gone green. It's already had a little bit of a run, and I might have to keep my stop down here, so it may have gone too much. But there's something going on with ABEONA Therapeutics, ABEO. All right, let's go on the regular way and see what comes up to the top that way. Same type of stocks. Semiconductor devices, AVGO announced a huge $12 billion share buyback, and it ran right up to the 200. You know, this stock has been in a quagmire ever since it's been trying to buy Qualcomm. I guess they're taking their Qualcomm money and buying their own shares back. You know, it's hard to look at this and get real excited. But I mean, in my personal opinion, this was news driven, but a break above the 200 might be interesting. Pocket pivots, kahuna out of a squeeze. Micron, I talked about it at the meeting that I kind of liked this. Looked like it was setting up to be an island reversal down here. It actually went up 4 of the 5 days last week, well, closed higher, hit higher highs 4 of the 5 days, although 2 days it had red candles, and has moved back up into the 50s. It's got some great earnings per share growth. And I think the actual earnings are 422. I don't know why it says 715. They're not out yet. NVIDIA, this was the big kahuna last year. Sideways, some momentum here would be interesting. Good earnings per share growth. Qualcomm, AAOI, on intraday charts actually looked like something was happening here last week. This was a winner that got clobbered last year on some missed earnings. So nothing real exciting to buy on this group. So far, it all looks like energy and precious metals. On the semiconductor manufacturers, we'll look at Applied Materials, Lam Research. You know, it's sort of a range-bound stock. It's in the middle of the range. Good earnings per share growth. Don't know if there's any catalysts coming up. Lam Research, almost the same pattern, higher price. Now, out of interest, since this is now gets up to the group, let's just look at the scale. Does anything else come up? Nope, nothing comes up on scale. So I'm not finding a whole lot that looks good. Sometimes that's a sign that the market's going to probably bounce. And when I find everything looks good, the market usually goes down because too much exuberance. On the infrastructure software, down pattern Oracle, Microsoft, obviously a great performer. It's gotten a little loose here, sitting above its moving averages, which is better than the indexes coming out of a squeeze. Earnings per share dropping, but looks interesting. FireEye it's in the right group now in the cyber technology, trading near its highs, also a takeout candidate. Don't love its fundamentals. Hard to find stocks that I love in this group. Now, this is interesting. OKTA, don't know anything about them. Doesn't make money. Nice pattern of breakout back in February. Now it's pulled back to the 17. Pocket pivot, kahuna mobile breakout squeeze on Wednesday rather. This one looks like it wants to go higher. In the essence of time, I'm not going to go through the rest of the groups, but I'm going to go look at casinos. There were some good Macau numbers, and I think it's reflected in the first couple. So Wynn Casinos, comment here is Steve Wynn's out. He's sold all his stock. So that headwind is behind it. They have a heavy presence in Macau. They have great earnings per share growth, especially compared to their multiple. Pay a small dividend. Looked like it was going to break out on Thursday, gave back a little bit on Friday, but still above its moving averages. Mobile breakout from a squeeze on Thursday, pocket pivots, kahunas, and a PSAR reversal. I like this one to go higher. I do have a position there. And Melco is a pure play Macau Again, Thursday looked really strong on Macau numbers. I do to the downside as well. I do the exact same thing, but I would look at two-day forced down. I find that doing that is less fruitful for me because I end up finding a lot of stocks that have already had too much of a move. So I end up looking probably more from a bottoms-up approach to the downside. But for example, I could look at two-day down, right-click on Internet Media, change the index group, and this will give you, these are some stocks that potentially are shortable. Weibo, I've been long for a long time, had a tough day on Friday. I think part of it being increased sanctions, so that's another thing weighing against the market. I still love the earnings per share growth, but if we don't settle what's going on with China soon, then these stocks are probably going to be problematic. Same thing with Baidu. Now, Baidu's already failed at the 200-day moving average twice, had a bearish engulfing pattern on Friday. Forces are down, weekly bongo is down, earnings per share growth in 2 quarters out looks horrible, it looks okay this coming quarter. That might be one to consider shorting. And I would do the same thing going down, diversified banks. You need to read some of the analyst reports or read the news to figure out why these fell. But what a horrible candle. Earnings came out. Initially, they looked good. Stock traded up. Here you have a weekly bongo. Forces are down. Weekly bongo negative. Forces are down. Red candle high. Squeeze. Bearish engulfing pattern. Pocket pivot to the downside and kahuna to the downside. I'm not saying I want to short this. I'd rather see it pull back some more and go long and build a position. But something happened with the banks. That is not good for my bank that I hold, which is Bank of America, which failed at the 50, and I'll hold it through earnings. I've got a lot of cushion, and I'm still much more bullish long-term on the banking sector. Again, in the essence of time, I'm not going to go through all 10 groups, but that's typically what I do. I then collect a zillion, literally, of different groups of either leading stocks or bearish stocks, and I'm just showing you some of the things that I collect. And then I take these groups and I throw them into one file called Consolidated Buys. I put some P&V, price and volume filters on them, and then I look at all of them, and then I come up with a buy list, which is a combination of the top down and bottoms up, which is this approach. And just to give you an idea of some of the things that I'm looking at going into Monday, although the market's going to determine things, and some of these are the same as last week. Well, the first thing is click by industry. Do you notice a sense here that energy matters? These are all exploration, oil and gas services, refining and marketing. I still think energy looks interesting. Let's look at a couple of specific stocks, and then I'm going to say goodbye. Virtue Financial, I mentioned them last week. They benefit from all the trading volume, and this is one that, unlike the markets, at an all-time high. I've needed to break out above this range, but great earnings per share growth compared to PE, pays a nice dividend, 2.7%. Royal Bank of Scotland, unlike our banks, this one actually broke above the 50. So it had some weakness on Friday, kind of a frying pan bottom formation here, one to keep an eye on. Certainly was a loser during the last recession. U.S. Silica Holdings, a similar fry pan bottom pattern. One of the sand providers, great earnings per share growth. KEYW, don't know what it does. It's had a big move from 5 to 8, and it looks like it wants to go higher. It had a PSA reversal, kahuna mobile breakout from a squeeze on Friday, despite a weak market. Gardner Denver Holdings, flow control, so it's got something to do with energy, struggling to get back above the 50. Great earnings per share growth. Another energy stock I liked was XOG, Extraction Oil and Gas. I liked the earnings per share growth, broke above the 50. These are not the world's best looking stocks. I'm the first to agree. It's what the market has, which isn't much. Marathon Oil, another energy stock breaking out. Tandem Diabetes, I bought some last week. It's in a very long-term call it a Jesse Stein pattern, beaten up, broken down, and something's happened here. It's moving. But these are the stocks that I liked. Again, heavy on the energy, and that was probably the best of them. I showed you Viper, was also one that I liked a lot within the energy platform. On that note, I'm going to say goodbye to those folks that I got to see in California. It was great seeing everybody. It was certainly a fun weekend. I know they're talking about doing it again in November. I'll have to see if my schedule will allow me to attend. But I always enjoy those, enjoy doing these videos. Hope everybody has a good week. I'm just going to finish with going into TradeStation very quickly and looking at the S&P 500 on some of the views that people who've been here know that I like to look at. Here's the E-mini. We are in a buy signal with a green, which is the Elder Impulse indicator. So those are both bullish looking. On the weekly, we're in a sell, but we went to blue, so that's softening the sell. On the monthly, we're in a buy. Weekly bongo still red. We're in low on the high jump. We could be at a point where this market rips higher. Well, rips probably the wrong word, continues higher. And this certainly is a much more bullish setup than we've seen over the last several weeks. On the Dow futures, hold on one second. Similar pattern. On the NASDAQ futures, similar pattern. And let me just add the Russell futures here. Similar pattern. So this is a lot brighter looking on the indexes that I've seen in the last couple of weeks. Not a lot of great looking chart patterns. So when I see a combination of the indexes picking up and the chart patterns looking ugly, usually tells me we're at a potential reversal point. And as I've said before, this is usually after taxes when the markets pick up. So on that note, have a great week, everybody. Still be careful out there. I'm not saying all in by any means. I'm saying that maybe we're going to see a market move into May, but let the market dictate what you do, not some old fart on a video. Good night, everybody.